Hello, traders. Gary Wagner here. It is 11:17 in Honolulu and 5:17 in New York on Monday, 27th day of June, 2022, and this is the daily report for gold and silver. Gold begins the week by trading under pressure, finding pretty good resistance at the 200-day moving average, which is currently fixed at $1,839.90. The high today, $1,842.80, so just shy of the 200-day moving average. Also, the 61.8% retracement that we've been using is currently fixed at $1,830. And we do have gold currently down $6.30 at $1,824 per ounce. Now that's in light of a little bit of a tailwind from dollar weakness. The dollar is down a little over 0.2% at 103.715. Lastly, the industrial metals have had a nice upward tick, very small and fractional, but up nonetheless, with silver trading up by 0.2%. $21.16.5 is the current fix for September silver. Palladium up about $1.20 on the day, and platinum also trading higher. Even though market participants continue to focus upon the exceedingly high level of inflation, there has been a shift in which analysts and market participants are focusing upon rising interest rates vis-a-vis the revised monetary policy of the Federal Reserve, as well as the potential for a recession caused by tightening interest rates much too quickly. We will get the first indication of that this week when on Wednesday the GDP for the first quarter of this year is released. However, the definition for a recession is a decline in real GDP for 2 consecutive quarters. We had a very strong GDP in the fourth quarter of last year, 6.9%. So it would be this upcoming report as well as the next report for the second quarter real GDP that would either validate or disprove that we are currently in a recessionary economic environment. To better illustrate the fact that market participants have shifted their attention away from rising inflation and are now focusing upon actions by the Federal Reserve, their monetary policy and interest rate hikes that most definitely have a high probability of leading us into a recession, is this chart. It is a daily candlestick chart of gold, and overlaid against that is the CPI, or the Consumer Price Index. We can see that the index has been steadily rising really from the end of 2020, and we can see that gold, for the most part, through last year and definitely accelerated in February of this year when we had a near parabolic move in gold, was focused intently upon rising inflation. However, as inflation continued to rise, we saw that high of March would be the highest trading value of gold this year, and from there we would have a solid price decline, one small move to the upside, and then for the last couple of months, a defined move to lower pricing. That clearly illustrates that market participants are focusing upon the Federal Reserve, interest rate hikes, and a recession rather than the exceedingly hot level of inflation. That being said, we will remain neutral with no active trades in gold or silver as we await the CPI and GDP report out later this week. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.